So we just went through BMO's article about their 2025 housing outlook, and honestly, it really hits home. A lot of those points that they made match what we've been talking about in terms of Toronto real estate, and they've also included some pretty cool charts that broke things down in a way that we thought would be helpful to highlight for you. So let's dive into this, but before we do us a quick favor, hit that like button, subscribe for more real estate investing tips, and if you're looking to chat one-on-one about your Toronto real estate investing needs, feel free to book a call with us. Okay, first thing, Canadian real estate is not all the same. In Toronto, for example, our market took a pretty big hit, and so we might actually see better recovery here. And what's important to keep in mind is that houses and condos in Toronto are on completely different paths. Detached homes are still in demand, especially from young families, which is actually keeping prices higher. Condos, on the other hand, are dealing with a flood of new completions, plus a lot of investor-owned units are hitting the market too, and so condos might not see the same kind of price growth that we're going to be seeing in houses. Now, a big factor in all of this is mortgage rates. Right now, fixed rates are in the low to mid 4%, and variable rates are around 4.7%, but they are expected to drop closer to 4% soon with the upcoming rate cuts. So around 4% in mortgage rates could actually become the norm for a while. The government also introduced some new mortgage rules that are going to help support the market too. For one, they've raised the price cap for insured mortgages from $1 million to $1.5 million, which means that you don't need as big of a down payment for properties between that price range. And they've also extended amortizations to 30 years for first-time buyers and those buying new homes, which does give people a lot more flexibility when they buy. And so when you crunch the numbers with lower rates and longer amortization periods, we are getting back to the way things were pre-pandemic, assuming prices stay where they are. For end users in Toronto, where most starter home prices are hovering around that $1 million mark, and if incomes continue to come up gradually, then this can support modest price increases here as well. Just don't expect a huge spike. On the investor side, it is still pretty tough to make a strong case for condos right now. When you compare risk-free GIC rates to condo rent yields, it's just not appealing, with rents also expected to drop further because of slowing population growth and more supply hitting the market. The days of big appreciation is definitely behind us, and condos aren't attracting much interest until valuations improve. One thing they didn't really mention, but we wanted to add, is that with borrowing rates coming down and construction costs starting to make a little bit more sense, and there's also a lot more government incentives now, like letting you build more units per lot and cutting development charges, plus new construction financing programs coming out too. All of this could lead to more investors focusing on value-add projects. It's definitely a more conservative approach that uses a little bit more elbow grease, but it can definitely bring faster, higher, and more reliable returns when it comes to real estate investing. But perhaps one of the biggest takeaways from the BMO article is that while it does seem like the market is finding a floor and might be picking up a little bit, we are still a very long way from the highs of 2022. BMO compared this correction that we're currently in to the past ones in Canada. Some, like the 2008 crash, were pretty quick, but others, like the one in 1990, took forever to recover. Now, BMO thinks that this time for us, we're somewhere in between, and it might not be until 2029 before we see prices hit those 2022 highs again. Now, the reason that this recovery is taking longer is because we had the perfect storm after the pandemic. Millennials entering the market, a huge boost of immigration, and interest rates at rock bottom levels. But now those factors are all easing at the same time, which means that it will take more time to recover. With that said, BMO doesn't think that we will be in as long as a recovery as the 1990s, where the interest rates stayed high for many, many years, which isn't really the case for us now, so it shouldn't drag on as long as that correction. So the article was solid and it does back up a lot of what we've been saying. Toronto's got some recovery potential for 2025, but houses and condos are on pretty different paths. Now, don't expect real estate prices to skyrocket anytime soon. And if you are looking for better cash flows, you will need to shift your focus to the multiplex space. And it's really about being more strategic for real estate investors moving forward. Looking long-term, strengthening your cash flows so you're more resilient no matter what market you're in, and leaning towards value-add projects for stronger returns. And if you're looking for some extra help figuring out what makes the most sense for you, let's chat. We're not just a real estate sales brokerage. We're experienced investors in Toronto, especially when it comes to multiplexes and value-add projects. Whether you're looking for a turnkey property or you're looking for one that can be converted into multiple units, we've got the know-how to help you through it all. Here's what it's like to work with us. We'll take the time to understand your goals, dig into the numbers to find the best investment opportunities for you, and eventually help you land the right property for you. If you're looking to take on renovations, we can connect you to trusted contractors and also coach you as you manage your project. And once it's all done, we can handle leasing and property management too. Are you ready to get started? Just head over to this link here and let's chat.